about getting a mortgage loan? It's a new scene out there. Big foreclosure losses, tough new regulations, and plenty of refinance business created a climate where it seems banks didn't even care if they approved your purchase money mortgage. The good news is there are steps you can take to help yourself.
The rule of thumb on credit scores versus interest rate is interesting, and it is an art. There's no science to it. It is true that the lower the score, your rate will not be as low as if you had a higher score. So for example, someone that has a 680 versus a 740, there could be an eighth difference in the interest rate. For a customer to help build their credit score, what I suggest is they try to have 3 open accounts. Perhaps even if it's a secured credit card with their bank, maybe go down and put $500 towards it and then charge 25 to 30% of that limit, and then only make the minimum payments for at least 6 months, and that will help build their credit score very quickly. Mortgage insurance is in place for low down payment products in case of default. On a conventional conforming loan, it's called PMI, which stands for Private Mortgage Insurance. There are several PMI companies in the country, and they all have different rates associated with regard to down payment and credit score. With regard to down payments, traditionally, if you put 20% down, you avoid the mortgage insurance. However, you can do 3% down, 5% down, or 10% down. The higher the down payment, the better the interest rate, and the better the amount of the PMI that will be charged to the borrower.
Finding the right professional is key. You can work with a mortgage broker or directly with a bank, and HUD-approved housing counselors are a great resource for guidance. You can find one at hud.gov. Ask friends, family, and coworkers for referrals, but always follow that with your own due diligence. Ultimately, it's up to you to ask the right questions, understand what you're signing, and protect yourself.
As far as the differences between a broker and a banker, brokers typically will secure financing and then shop the financing amongst different lenders. They in turn receive a fee for that service, whereas a banker or a direct lender works directly with that one lender, and they fund, underwrite, and close their own loan.
If you've had a short sale or a foreclosure, you may need to wait 2 to 4 years to requalify again.
With regard to short sales, foreclosures, there are credit waiting periods for each of those credit events in somebody's life. Depending on the type of financing, depends on the waiting period. For example, FHA has a 3-year waiting period, whereas conventional would be 2 years for a short sale, but with 20% down. If they want to put down less than 20% down, then it's a 4-year waiting period. So each event is related to that person's individual background. With regard to applying for a mortgage, which everybody gets pre-approved now, we get everything up front. 2 years full tax returns, whether you're W-2'd, salaried employee, or you're self-employed, with the attachments, 1099s attached, 30 days pay stubs, and 2 months bank statements. Everybody.
Email your questions or your own experiences getting a mortgage loan to Ask the Expert at shariolefson.com.